Welcome back. You are watching Power Lunch on Ndtv Profit. We are joined by a special guest all the way from Kuwait, Marcos Williams, fund manager and consultant, India Fund, the money which was raised just now in the Middle East. But before we go to him, we'll quickly take a look at the markets, down 97 still, and you're looking at Nifty, which is also sharply down. So it's all-round selling coming in today. But let's welcome Mr. Marcos Williams. Mr. Williams, thanks so much for joining us on NDTV. Good to have you on the show. We are talking to you about this fund that you've raised, and obviously you're extending the date of that fund. May I ask you, why are you doing that? Have you not raised enough capital, or is it because the appetite is too strong?
The appetite is too strong. In addition to that, there is a lot of IMD money which is flowing into Kuwait on the 29th. So we had a request from a lot of NRI associations requesting us to extend it by at least a week.
Right, sir. You've been put in charge of this. You're looking at investing in the equity markets. It's one of the first ever time that such a fund has been launched under your guidance for specifically for the Indian market. By when do you think the money will start flowing in?
We expect the money to flow in very quickly between the second and the third week of January 2006.
Right, so we will see a big bang January thanks to you in the markets. Let me get a sense of the kind of strategic initiatives you'll be taking. How would this be special? And looking at your returns that you're expecting, it's a bit too conservative given the way the Indian markets have surged. Why are you being so conservative?
See, it's importantly we have to realize that this is a Sharia fund. And in a Sharia fund, this is incidentally, this is the world's first Sharia fund. And we are looking at investing in a select universe of stocks, which prevents us from investing in the whole sector. So see, the investors here are pretty comfortable with this kind of returns which we can provide, which we can under-promise and over-deliver.
Right. What would be the other yardsticks, if you could share with us, sir? I know I'm deviating from that. Under this Sharia fund, what are the other preventive measures that you have to keep in mind?
See, under the Sharia fund, we will have to invest we'll have to keep away a lot of stocks. For example, we have to, from the investable universe of stocks, we'd only look at those companies which do not deal in alcohol, tobacco or pork-related products. We can't look at the financial services sector like conventional banking, bonds, options, futures, short sale contracts and preferred stock. Neither can we look at the entertainment sector like hotels, gaming, cinema, music. And also the defense sector where arms, munitions and weaponry is manufactured. And then we have certain filters which make the application of investment possible for us. Some of these filters, for example, say that the total debt of the company divided by, say, the trailing 12-month average market cap should be less than 30%. In addition, the sum of a company's cash and interest-bearing securities divided by a trailing 12-month average market cap should also be less than 30%. And the revenues from forbidden elements divided by the total revenues should be less than 5%. So we have these limitations. Within that, we are looking at a conservative return.
Right, and yet you are interested. Obviously, the interest must be huge. Mr. Williams, give us a sense. You're looking at $170 million right now. What does this tell you of the overall interest in the Middle East as far as the Indian equity markets is concerned? What would be your synopsis of the situation?
Now, see, as far as Islamic investment is concerned, there is a growing demand for Sharia products. Now, investing in equities of companies are strongly encouraged by Sharia. Now, then as far as this Sharia-compliant equity funds are concerned, you will find that globally there is about 100 or so funds which manages an assets of $5 billion. Now, there is growing interest in these kind of products, but then the perception of India has changed dramatically over the last decade. And in the region, as a former American ambassador says, the center of gravity is moving eastwards to Asia, away from Europe and North America, and India will be the motor force in globalization. Now, this reality has begun to sink in, even in the Middle East region. And the India growth story has attracted investors around the world. And while the investment flow from the Middle East has only just begun, no region in the world can afford to ignore an economy like India, which accounts for nearly 5.9% of the global GDP.